Hey guys, so in the previous video we talked about where are the buyers and sellers, how you can recognize them, why they're here, why they're not here. So let's dive into the precision of trade taking. So basically you want to understand where the buyers are starting to buy, what price interests them, and where the sellers are starting to buy, what price interests them as well, because then you'll be able to be more precise in recognizing exactly the price that interests these buyers and these sellers and take advantage of this knowledge. So let's dive into it. Let's go. Okay, so here we are on Euro USD, and again, same thing. We want to go back and we want to understand why is there some kind of prices that reject um, buyers or reject sellers, meaning there are limits in the price, right? Let's say you start here, right? And I'm gonna draw. I don't like to draw because I prefer, but I prefer to like read the chart naked because I understand the price. But for the sake of understanding and for the sake of visualization, it's important to do that. Okay, so let's say we start here on the left. You see that push going to the upside. Here at this price, it stops going up. So it hovers around and it doesn't go lower than here, and then it pushes back up. So here you might ask yourself why the price doesn't go lower than here. And mind you, it's an area. It's never a line. A more accurate way to do it would be to basically draw um, a box here. So for example, if I do it a bit more accurately, right? This would be the start of the area that interests me, and this would be the end of the area that interests me. Because this whole area was a buyer area, so the price didn't go lower than here, okay? However, in the time frame we're talking about, in the time horizon we're talking about, it didn't go higher than here either. So let me take this. Great. I'm fighting with my own chart. So it didn't go higher than here either, right? So this is the highest price from there. And then you see that price not going higher. And then you see that area being breached by a big buyer. So guess what? Here, you know that there are buy orders. And here, they're not necessarily sell orders because we're not in an active market. The time says that it's night, so we are outside of a session. However, there's still some kind of activity, the price is hovering around, and then you see a big push there. Now, the next market structure interests us very well because it's a range. And this is very, very, very interesting. Why? Because once you have that breach, that same area got used to place buy orders and not sell orders. So here you have a complete area where the price didn't go lower for, a few days. And you want to ask yourself basically why. You would like to know why. The price came here, pushed to the downside. What happened? Got pushed to the upside. Tried to retest it, didn't even go there, pushed to the upside. Tried to retest it, didn't even breach it, got pushed to the upside. And on top of this range, the same kind of happened. So from here to kind of here, you want to have an area. So supply and demand areas are not lines. When you see people drawing lines of support and resistance, is very inaccurate. This is why they keep talking about, oh, I got faked out, or I had some wicks pulling up and down. No, this doesn't happen when you understand that supply and demand are areas, not lines. So this whole area you want to be careful of. And this is very important to know where to place your trade, where to place your stop loss, and where to place your take profit. If you don't understand that, it's going to be very hard for you to take full advantage of the market because you don't understand how it works. You want to understand the rule of the game to be able to apply your strategy based on the rules of the game. You cannot beat the market. People be like, "Oh, I'm very excited to have the challenge to beat the market." No, you cannot beat the market. What you want to do is be able to basically understand the market, know that the market is king, and once you accept and understand that the market is king, then you can play with the real rules without feeling ashamed of having a loss because that's the name of the game. But what you want to do is reduce the maximum possible your downside, to limit it, to control your risk. So like this, that's a very good way to controlling your risk. First of all, understanding that supply and demand areas are areas and not lines. So it's not a particular price, it's an area of price. You see that price from here to here, from here to here. You got the price reaching really low before being pulled back up. And here you see the price reaching really far up before being pushed back down. And this is the dynamic that you had for a few days before it got breached, right? So here, what you want to understand is that lower part of that range, you probably had some buy orders placed there. So every time the price would reach there, it would get pushed up because there are buy orders. And same there. On the top of that range, you may have sell orders. So it's basically people who place sells or buys beforehand, and they say the rule is basically if the price is reaching that level or that area, we're buying automatically. Or they might also place market orders, which is fine. It's the same thing that is happening. The price is reacting in the same way. So you might even be in any other asset. It's going to be the same thing. So basically you have a breach. Now you want to understand when there is a breach, it must be powerful to be able to break something like this. You cannot have a breach which is not powerful. If you have a breach of something like this, an area that pushed the price up multiple times, whether if the breach happened in the upside or the downside. Look, a few days the price didn't move from this area. So this push must be very powerful. And it didn't stop, it didn't even pull back for a few days. It just pushed back, it just pushed down and down and down and down and more and more and more and more. Until here, got pushed to the upside, but didn't even last long, so we're not considering that, and it pushed down. Now here, that stayed a few days. So this is important for us when you place something here and when you talk about something basically around here, right? So let's say you are in a range, you want to trade a range on a lower time frame. What you want to understand is that if the price is down there, you don't want to be a seller, you want to be a buyer because you have more probability of a buy. And if you're here, well, you want to be a seller because you have more probability of a sell. So you want to understand, and you want to understand this, and why it's important, because the price tells you its own story. The fact that you have a chart and a visualization of the price, that tells you, hey, this is what's happening in the market. And if you're smart enough to be able to understand what's happening in the market by what you're seeing through the candlestick, you are a winner. You'll be a winner in the long run because you'll understand that, hey, here I have more probability of a buy. If I sell here, I need to be extra careful and I need to have a reason. However, even though here you came from an uptrend and the price hovered around, obviously if you sell here, that's kind of shaky. However, if you see that breach happening and then you sell here, knowing that you need power, knowing that there is power because you need power to breach that range and that demand level, which became a supply level now, you will feel safer to basically sell. Now, I'm not talking about the SL right now. We're going to talk about the stop loss and the take profit later on. But this will be a crucial part, understanding supply and demand and areas of interest and areas where people might or might not place their buy orders and their sell orders. This is a crucial area to manage your risk, to manage your trade, and to know where to place your stop loss and your take profit. You don't know that, well, life is going to be hard, to be honest. I'm going to be honest with you. So here you'll feel safer to sell because look, power of breach during the day. Oh, that was my bad. That was that was pre-market, and then you got a continuation during the market. So basically, you're selling here, you're making a profit, right? And now here, you see that the price pulled back up. You might think, okay, it's probably gonna go down. Even if you sell here, you might take a small profit. Well, that's gonna be kind of shaky because it's gonna be a very small profit compared to this push, but that's fine. And then you see the price being pushed here, being pushed here, being pushed kind of here. It's the momentum is slowing down, being pushed here again, and breaching these levels. And you're asking yourself, okay, now that I understand that there is some kind of levels where buyers are waiting for the price to get there so they can buy and push the price back up, or if the price is bullish, sellers are waiting for the price to get somewhere for the price to get pushed back down. You want to be you take all the information that you know. We talked about momentum, market participants, what's going on in the chart, areas of interest, buyers and sellers, supply and demand, and it's going to be a puzzle. It's going to be basically a guide that tells you, hey, this is what's happening, this is the whole story behind it, and there is purpose behind it, or there is no purpose behind it, and then you'll be able to basically take care of what's going on in the market, write the price, and manage your risk. And once you're going to see that push to the upside, you're going to ask yourself, when can I buy? Because it needs power. And then you're going to start recognizing, again, you're going to start applying our knowledge, that what we learn, you're going to start recognizing this area, that what's happening here. So you'll start recognizing this. The price pushed down. Is it a pullback? Is it a push to the downside? Is this sustainable? Does it have purpose? Okay, you'll probably decide yes if it came from a news or from some kind of fundamentals. You'll see the price pushing to the upside, hovering around here, and you might ask yourself, okay, it's probably getting ready to push to the upside. And then you see a push down, breaching these levels, reaching that previous low, and then get pushed back up really quickly and hovering around to that same area that we had here. But you're not buying it yet for the simple reason that you're asking yourself, hey, if this got pushed so many times, why would this not get pushed back down again? And you're right. However, you'll have that push coming up. And then you'll decide to buy here and you'll make a profit, right? So this is just to understand areas of interest. So we talked about buyers and sellers. We understand that there are buyers, there are sellers. And this, if you break down buyers and sellers, there's a lot of market participants. There's a lot of things going on in the market. You understand that a price needs a fair value for buyers and sellers to find a consensus price and decide on the fair value of that particular asset to be able to exchange. So people that actually need that particular asset will hate the fact that it's volatile. However, us as traders, we will love the fact that it's volatile because this is where we make extra money. Okay? It's that simple. Now that you understand areas of interest, we want to break the chart down into time frames and understand what are time frames and how you can take advantage of time frames. So when I was talking about, for example, here you have I don't know, I said here you're gonna sell and you're gonna make a small profit. you're probably going to make a small profit not by selling on the 1 hour, but you'll have to break down the chart to the 15 minutes or even the 5 minutes, which is a bit noisy, so people don't really like it. So let's say the 15 minutes, and then ride that small push to the downside and make a profit, right? So now that you understand these things and you took notes, I hope that you took notes, you'll be able to start imagining or conceptualizing basically what's going on in the chart and what's your role and how you can make extra money off what's happening within the price of a certain asset, because it's all about price. It's all about price. Now there's a lot of things embedded in the price that you need to take care of and understand and know how it affects the price of that asset, so the price can move up or down or sideways or whatever it moves, and take advantage of each move that's going on in the market, right? I think it's a bit more clear than people talking about patterns and candlesticks and stuff like that. No, price. That's what you want to focus on. Price fundamentals. Khalas. That's it. Like they say in Dubai. Khalas. Okay? So, see you in the next video. We'll talk about time frames in the next video, and this will be important because you'll be able to have to understand what is a top-down analysis and take advantage of each move of the market to have a deeper analysis and hedge your risk better, right? See you on the next one.